Hello traders, Gary Wagner here. Just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 23rd day of December, 2020, and this is the Daily Report for gold and silver. For the first time in the last 3 days, we saw gold actually show moderate gains, strong gains in the spot market as buying and dollar weakness both contributed, and moderate gains in futures in which it was mostly dollar weakness that was the result of today's $6 gain. We'll talk about that when we pull up our price board, but in our technical studies, I want to discuss a revised upside target for where we believe our models suggest gold will trade to in the first to second quarter of next year. Let's take a look at today's pricing. After witnessing gold decline for the last 3 days, today's gain in both gold and silver, as well as gold spot pricing, was a welcome relief. Currently, we are looking at the most active February contract of COMEX gold at $1,877.30, which is a gain of 0.38% on the day. And why that is so important is when we look at the dollar index today, we see that the dollar declined by 28 points at 90.26. But what is most interesting is that when we look at the percentage decline, which is 0.31%, and we compare that to the gain in gold futures, which is 0.37%, it's absolutely clear that only a small fractional amount of the gain today can be attributed to buyers entering the market. The vast majority, about 90+%, is directly attributable to dollar weakness. The same cannot be said for the spot market in gold, because there we had a combination of moderate buying as well as dollar weakness. We currently show spot gold at $1,872.50, but as you can see, I have just put up a screen print of the Kitco Gold Index that was taken roughly at 4:20 Eastern Standard Time today. At that time, spot gold was fixed at $1,871.90, which is a net gain of $12.40 on the day, and you can break that up into dollar weakness accounting for $6.50 of today's gains, and the additional $5.90 was directly attributable to buying. Silver futures basis the most active March contract is currently fixed at $25.71. That's a gain of about 17.5 cents on the day. The two ETFs that we follow had moderate gains, $1.16 in the GLD Trust, 175.65, and SLV gained about 1.5% and is currently printing at $23.80. Lastly is Bitcoin. Bitcoin obviously has been on a tear. It gave up fractional amounts in terms of recent gains, down $225, but is still well over 23,000 with a current coin worth $23,580 on the CME's Bitcoin futures contract. Let's take a look at our current technical studies. This first chart that we're looking at is a Japanese average chart, a Heikin Ashi chart of February gold futures. You might recognize it from yesterday's webinar that we put on. I hope you enjoyed the content. What we can definitely see is although we have had weakness over the last couple of days, we truly can draw a upward trend line showing that the market has actively moved off of the bottom, which occurred at approximately $1,770, and is moving to higher ground. And what is so exciting about that in my eyes is that when we look at our current candlestick chart, which contains Elliott wave, candlestick patterns, and a Fibonacci extension, it gives us some real strong areas to forecast where we could see gold go through the first quarter or second quarter of next year, because the recent action really lends credence to the idea that we hit a low and the conclusion of a fourth corrective wave back at the beginning of December. That is when we had gold priced at around $1,750. We are well off of that pricing, a little over $100 above that. And with solid confirmation that the fourth corrective wave has completed, it allows us to do a basic Fibonacci extension and forecast where we believe pricing will go. We're simply going to take the move from 1450 up to the new record high at 2088. That represents our wave 3. We are then going to start a extension from 1750, which is where we believe the correction ended. And what we can see is that if it goes to a 0.618% extension of wave 3, it means that we could see gold trade as high as 2163. A 75% extension of wave 3 would be 2248. And since the Elliott wave rule is that wave 3 cannot be the shortest of any impulse wave, we could see it trade as high as, call it 2390, depending on the fundamentals at play next year. So that makes me very excited about the upside moves. We've had really good profits so far this year. I believe our total is approximately 110% profit over the year. And with the corrective fourth wave complete, we can now forecast where we anticipate gold pricing to move next year. And the prices we are forecasting will allow us to have some real profit potential in 2021. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow with the weekend review that will come early due to Christmas on Friday. Have a great day. Bye-bye.